Hello and welcome everyone to the first deep dive of 2024, and we're starting it off with a bang. Today, Higgo will share his top picks for 2024. And of course, Higgo needs no introduction. He's the CEO of FinMeUp, and he has outperformed in the past. Did someone say Santova, Nvidia, Bitcoin even? The question is, can he do it again? So, Higgo, without further ado, the floor is yours.
Thanks so much, Paul. So in this video, I'll be giving my stock picks for the year. I've chosen 10 companies. I know it's quite a lot, but I believe it's a delicate mix between large caps, medium caps, and small caps, as well as geographically diversified. Remember that this is not financial advice, and 1 year is really a short time in investing. So it's very difficult for the timing purposes, but you know what? Annual stock picks are fun, and this is probably my favorite video of the year. So let's get into it. Also, a reminder that Paul, your wealth wingman over here, is giving his picks tomorrow. He's got 6 picks lined up for you, so they will be live tomorrow. And over the course of the year, we will do updates as well as deeper dives into the chosen company. So we have the stock spotlight where we cover the most important stock market news of that week with some insights. So make sure you are subscribed so you don't miss that. So awesome. Let us know what your 2024 picks are in the comments. So with that being said, let's get into my picks. My first pick for the year is AMD, Advanced Micro Devices. The past 5 years, the share price is up 635%, which is massive. And the share price as of today, which is 8 January, first day back into the office, the share price is this morning $140.36. So the first reason why I chose AMD is it's part of the AI theme. We know that, with ChatGPT and with all these AI tools, that AI is here to stay. We've all seen the movie I, Robot, and there's a lot of things going to happen over the next few years and even generations, specifically in AI. And for AI to happen, you need semiconductors. For technology to advance, you need semiconductors. We've all seen NVIDIA. That share price just skyrocketed the past year as well as the past few years. NVIDIA was actually one of the first companies offshore that I bought back in 2014. But I just think NVIDIA is too expensive. And why I chose AMD this year, I actually think, we all know NVIDIA is a leader. They are ahead in this AI space. But I do believe that AMD has the potential to catch up. There is a massive demand. We've seen ChatGPT Plus pausing subscriptions, and you have to get on a waiting list just because the demand is so high. And in order for the supply to catch up to the demand, there's a need for semiconductors as well. And I chose AMD. I also love ASML, but my semiconductor pick for this year is AMD. Another reason is the growth in gaming and data centers. So their data centers have been showing incredible results the past few years. Because as we use Instagram, WhatsApp, it's data, and that data needs to be gathered. And they also provide the semiconductors for that. So that's AMD. That's my first pick.
Yeah, I love it. Yeah, if NVIDIA has anything to go by, AMD will skyrocket this year. And I love what you said. It's all about demand and supply. And supply is in the shortage. It's at a shortage in the market at the moment. So yes, let's hope for the best there. What's your second pick, Higgo?
So my second pick is a company we've spoken of so many times. That is Santova. I was on the edge of choosing it or not choosing it. And I'll tell you now why. The share price as of today is R7.50. I still believe it's at an attractive valuation. For those who've been following this channel, I've been a massive Santova fan for quite a few years now. The PE is below 6. It's at a market cap of just below R1 billion. They've got strong cash reserves. In the previous financial statements, it was at R491 million. They're doing aggressive stock buybacks. They've been buying back stock now for many years. I love stock buybacks when at good valuations because it grows the earnings without revenue really having to grow, and you own a larger percentage of the company. So they'll continue doing stock buybacks. I also expect and I hope to see some growth in the new areas. So they are obviously a global company. More than 70% of their revenues and earnings are offshore. But the two areas I really want to look at this year in the next set of results is Asia as well as the US. So they've entered those areas a while back, the US most recently. But I'd like to see some growth in those areas, which will be interesting to see. Then one of the factors why I was on the edge, am I going to choose it or not, is the shipping rate. So they're obviously they are sensitive towards the shipping rates. And over the past year, the shipping rates have fallen off a cliff. The past month or so, we've seen a bit of a rebound just because of the global conflicts and, a few factors. But I still believe we're going to see lower shipping rates for longer. In some of their areas, it doesn't affect them. In some of the areas, it does. So it's going to be interesting to see how that affects them. But, overall, I'm still a big fan. And finally, the last thing that I'm expecting this year is strategic acquisitions. So from history, we've seen that Santova, they buy for lower valuations, they buy, supply chain companies in different areas at low PEs, smaller amounts, and then they grow the business organically from there and put it into their network of, different areas and different solutions. And I expect to see more acquisitions. They've actually mentioned this in their presentation. They believe that now is the time and the appetite for acquisitions have returned. So we might see some acquisitions in Santova this year. But, it might not have an amazing year, but this is one of my long-term picks and I'll continue supporting him. So let's see how they perform this year.
Very interesting. I actually think Santova is going to have a tough year this year myself, but thus far, the last 5 years has been amazing for the company, and you've stick to your guns and you've done exceptionally well. And if you guys want to see the deep dive that Higgo and I did on Santova, check it out right here. It's a 20 to 30 minute deep dive where you can learn all about Santova. Right, Higgo, number 3.
Third pick, Paul, I know you also like this company. It's not usually a company that I pick, but, for me, this is just a safer bet, and that is Caxton. The share price as of today is 10 Rand 22 cents. The reason why is I don't see a lot of downside risk. First of all, they're sitting on a lot of cash. The cash almost covers the entire market cap. So that is without their operation. They are a dividend payer. They're currently sitting at around a 7.8% yield, around about there. Another thing that, as I spend more time thinking about it, but another thing that I like about Caxton is we see a massive global movement. We've seen it now the past few years, and I personally believe we're just going to accelerate with that, is reducing pollution and reducing plastics, reducing carbon dioxide and all of that. And a big beneficiary for that, in my opinion, is the paper industry. Because, when you go to Woolies, you no longer get your plastic bags, you get paper bags. When it comes to online shopping, when your delivery comes, it's in boxes. And all of those things are a benefactor for Caxton. And I believe that industry, they'll definitely benefit from that movement. And then also the valuation. The PE is just above 5, so it's not a high PE. It's sitting on a market cap of 3.75 billion, so it could be classified as a smaller mid cap. But they've got a net asset value of close to 20 Rand. And the share price is on 10 Rand 22. So, there's not a lot of downside risk in my opinion. But when you look at the cash, dividends, which is, just a nice thing you can get from this company, the paper industry that I mentioned, even though it has its challenges, and the valuation, and the final one is potential benefits from easing inflation. So we are seeing that inflation is coming down, and everybody expects the inflation to come down even more. It could change, especially with the global conflicts and shipping rates maybe going higher and all of that. But I still believe that we'll see lower inflation than we did past year. And they'll benefit from that because then their raw materials and the input costs are lower, so that'll help their earnings. So, looking
to very, very exciting space, which is the packaging, of course. Right, on to the next, number 4.
My fourth pick is more on the global stage, and that is a company called Mercado Libre. It is currently at $1,548. This is a company I've been tracking for quite some time now. It's a high growth pick, but they actually turned profitable. So the reason why I'm choosing them is a few reasons. First of all, their consistent performance. They quarter over quarter, year over year, they're delivering incredible results and beating expectations. So their execution has been incredible. The management, they really give me confidence. If you look at the management, this is obviously a short video, so I can't go into detail, but the management gives me confidence, happy to continue supporting them, and they've shown through the execution that they can deliver. Then also, two of the big areas that they're operating in is e-commerce and fintech. Okay, and both of those two spaces, we know that there's big opportunity in that, and they are operating in Latin America, so it's also a bit of a geographic diversification play. But I believe that they'll continue expanding their online retail as well as their financial services offering. Also, the market dominance is just it's almost a monopoly in Latin America. And finally, they are actually now profitable. For a high growth company, if you go look at just go type in on Google Mercado Libre revenue or financial results, and just look how they deliver. It's incredible. There's a lot of graphs on the internet that will show you that. They are currently on a PE ratio of 81, which is very high, especially in South African terms. But they are a high growth company, and they're growing revenues at a phenomenal rate, growing earnings at a phenomenal rate. And I believe the growth will catch up to the valuation, and I hope to see that. I believe we'll see a good year from them again. So let's see how it goes. My fifth pick for this year is a bit of a spanner in the works, not the usual stock picks, and that is in the crypto. So I chose EC10, which is short for Easy Crypto 10. It is the 10 biggest cryptocurrencies in proportion that you invest in a bundle on Easy Equities. I first chose Bitcoin when I was preparing for this video, but then I thought to myself, I also want some Ethereum exposure, just because, we believe that the Bitcoin ETS will be approved soon. Remember, this is as of 8 January. We don't know if it will happen in January or in March or later this year, but I do expect the ETFs to be approved if you look at the global pressure that is on that. And once that is...
Hi everyone, this is your Wealth Wingman, and just to let you know, ever since we recorded the video, the Bitcoin ETFs have been approved. A massive step in the right direction for crypto, all the moon boys out there, including myself. So let's see where it goes from here. But yes, this is a tick a positive tick for us and a step in the right direction. Cool.
Approved. I do believe to see some shift towards Ethereum as well, because it is the second biggest. So I chose the EC10 because of those two mainly. And so the first reason is the ETFs that's expected to be approved. The second reason is if that happens, or when that happens, we'll probably see, and that's assumption, institutional adoption. So, if I think about all the people that I've spoken to, people with money, and people that don't even own Bitcoin, I've asked them, if there's an ETF, if there's something on Alan Gray or on the platform you use, would you then buy Bitcoin if there's an ETF? And most of the answers were yes, because it just feels safer. So the same for companies. It's much easier now. So ETFs could be approved, then we'll probably see some institutional adoption. Then it's also the halving happening this year, somewhere in April, where it drives down the supply. And then we'll have the demand that's probably going to be increasing because YouTubers and people like us are talking about this and talking about it at the Bri. So I expect to see some retail FOMO again. The thing about Bitcoin is it's almost like a self-fulfilled prophecy where, the promise is that you're going to make money. And when people speaking about the ETFs and the halving and all of these factors, more and more people are like, okay, should I buy Bitcoin? Should I buy Ethereum? Which drives up the demand at the end of the day. And I won't be surprised to see retail FOMO. So I chose EC10 for this year as my crypto pick and as a stock pick. So yeah, it's my fifth pick.
I love that, Higgo. That's also one of my biggest, or actually it was my biggest holding over and above Caxton for 2023. And I will continue to invest aggressively in EC10. I think definitely FOMO, not only retail FOMO, like the general guy on the street, but also institutional FOMO now that we have the ETF. Will it be approved? Don't know, but in my opinion, it will definitely happen somewhere in 2024. It's going to drive institutional demand and FOMO 100%. Everyone wants a piece of the pie, and everyone wants to make money at the end of the day. So let's see what happens.
My sixth company is called On Holdings. Their code is ON, so ONON. They are listed in the US as well, and it is a clothing company, mostly shoes. And I'm sure you've probably seen people walk around in On. The O doesn't really look like an O, but it looks like this and then an N, and that is On. And I've seen quite a lot of people wearing it. My wife wears it. My father-in-law wears it. I've seen a few friends. I've seen a few people in the gym. But they also do clothing, and I'm sure they'll expand their product. So they are currently at $26.74. In the latest financial results, which was in Q3 in November, they announced that the revenue jumped 46.5% year over year, which is proper revenue growth for a company of their size. It's not a small startup anymore. Their earnings grew 175% year over year, So I believe they've reached that point where you'll see more earnings growth than revenue growth. We'll have to see if that continues. And also in those results, they raised their full year guidance. So their full year revenue is expected to be just over $2 billion. And if you look at the recent growth trend in the revenue, the earnings, even Google Trends, when it comes to B2C, business to consumer companies, I like going on Google Trends because it shows them the activity on the internet. And the past 3 months, so since their results that they announced in November, since then, you can really see there's been a spike. Obviously, it's festive season and people shop a bit more, but the trends are looking good. And also they raised their guidance, which is also lovely to see. Their brand visibility. So as I mentioned, whether it's family, whether it's friends, whether it's random people in the gym or wherever, I'm seeing more and more on. If I compare it to 2 years back, I never saw anybody wearing it. A year back, I've started seeing people wear it, and now I see everywhere is like on. Not everywhere, but it's still early days. But I definitely believe we'll see more brand visibility over the next year. Another key, let's call it theme of the year, will be the Olympics. I don't know if you are the same, but for me, when there's a Rugby World Cup, I have a rugby ball, and I just want to go play touch rugby. If it's Cricket World Cup, I want to go play cricket. And now we have the Olympics. Okay, so athletics is back, and there will be a few athletes that are sponsored and wearing on, which could help the overall theme of it. And also the share price has seen a recent pullback over the past 6 months. We've seen a small pullback. So for the stock pick purposes, I'm glad it's now. But I'm excited to see what On will deliver this year. It is still early days for a company like this. Nike is so much bigger than them. But yeah, let's see where On goes. It's one of my picks.
It's so interesting. It's one of those things I've never seen anyone wear it, but now that I know of it, I'll probably see it everywhere. It's like when you study for your learners, your drivers or whatever, all of a sudden it's like there's so many stop signs and traffic signs and whatnot. Will be one of those cases for me, maybe for the viewers as well. Do you see anyone with On? Maybe now you'll see it everywhere. But anyway, next, here you go, number 7.
My 7 is a small cap on the JSE, and it's really a small cap. They're trading at 51 cents. Their PE is around 10, and they're sitting on a dividend yield around 4%. And that company is called Foresight. It's a company that I've started averaging in 2023, just because of their strong recent performance. So they really posted solid results and a positive outlook. I can't remember which month it was in 2023. And it just feels to me, since the new CEO, Tercia Zitska, came in, things started happening for them. It just feels like he is the man for the job. And they are operating in a space that has a lot of potential, and that is technology, and specifically AI. So they pride themselves in 5G and all these fancy phrases. But at the end of the day, they are a B2B company. And the nice thing about B2B, when you sell to other businesses, it's way more sticky. So, when there's recessions or economic uncertainties, businesses will most likely not cancel their contracts because in most cases, they need the software, they need the solutions that a company like Foresight provides. So the past year, the share price has already grown by more than 100%. They've paid a nice dividend. With all of that, I still believe it's early days since the new CEO came in. And they are aiming for 70% annuity-based income. I'm not exactly sure how far they're away from that, but from what I'm seeing from the comments in the statements and so on, it is quite close to 70%. And the nice thing about that is it's recurring revenue. Annuity means recurring. So they're aiming for 70% recurring, 30% obviously once off. And, if they manage to achieve that, I'll be really happy as a shareholder, even though it's still a small position in my personal portfolio. Definitely a company I'm going to track closer and closer this year. And it's obviously one of my stock picks. So let's see how they perform as a small cap on the JSE. Okay, so my 8th pick for this year is a company called Scottish Mortgage Investment Trust. Okay, so some big words. They are currently trading at $750.80 British pounds. So they are listed on the London Stock Exchange. So a bit of a new one. Usually we just cover JSE in US. The reason why I chose them is for the diversification and exposure to high growth companies that's not easily accessible otherwise. And so just for interest sake, you can go on their website for more. But some of their portfolio holdings include ASML, Mercado Libre, Nvidia, Tesla, Amazon, Ferrari, Tencent, Snowflake, and then they also own a few companies that you can't really invest as a retail investor, and that includes companies like Stripe, SpaceX, and a few other companies. So it's a mix of high growth companies and companies even like ASML that is just a monopoly in the semiconductor space as well. So for me, it's almost like an ETF, this pick, but for high growth, high quality companies that you also couldn't access otherwise, and it also gives you access to a global exposure in various markets.
Very interesting. So it's the first one that's not in SA or US. It's of course a holding company. So you're actually going for sort of like an ETF. I like that. And I also like that I can invest or I can get exposure to companies that's not listed. And maybe there is some upside potential and it's a pick that no one else will actually have.
The ninth company is Brookfield Corporation, currently trading at $38.65. It's also a unique investment opportunity, or it gives you access to unique investment opportunities. And they've got quite a diverse portfolio in key themes globally. So it's in renewable power, infrastructure, private equity, real estate credit, and insurance. They've got a really strong leadership team with potential for value unlocking over the next 12 months. So obviously they've split into two, Brookfield Corporation and Brookfield Asset Managers. I've just chosen Brookfield Corporation as my main one, but I like both companies, and I do hope and I do believe we could potentially see some value being unlocked this year. Also, they've got a global presence, so they can look. They've got the resources that you and I don't have. They've got the resources to go into countries and to do really, really big things, whether it's renewable power, infrastructure, and for me, it's just also diversification play into these key themes globally and backing people who really know what they are doing. So yeah, Brookfield Corporation is my ninth and second last pick.
Interesting. You go last off with a banger. What is your last pick for this year?
So my last pick, my 10th pick for this year is Master Drilling. This is a company that since 2014 or 15, everybody's been talking about Master Drilling, and it's a solid company, low valuation. They've got a massive revenue pipeline, all of these exciting things, and the share price just hasn't delivered. And we haven't really seen a lot of action from the management. We haven't seen stock buybacks or anything big to really unlock the value. So the reason why I chose Master Drilling is, first of all, some diversification into the commodity space. The commodities have been hammered over the past almost 24 months, but I chose them for the low downside risk. So it's almost just like a hedge against my EC10 choice. It's low downside risk because of the low valuation, and they've got close to a monopoly. So they are trading on a PE below 5, a dividend yield of above 6, and I do expect, so they didn't declare interim dividends, but they are going to declare annual dividends sometime this year. And I wouldn't be surprised if it's a juicy dividend, because they are sitting, they've got a strong balance sheet, and they need to do something to reward shareholders, because insiders also own a big percentage of this company. So hopefully this year, when it is one of my picks, they will unlock some value there as well. But it's also an international exposure company. I'm not exactly sure how the global conflicts will roll out over the span of the year. Nobody knows. And even how it will impact certain companies like Master Drilling. But overall, I feel I'm happy with Master Drilling. Low risk, in my opinion, because they are at a really low valuation. I can't see how it really goes much lower. And I'm expecting a nice, juicy dividend as that forms part of the return.
Right, everyone, that is Higgo van Biljon's top picks for the year. 10 picks, 10% per pick. And that will be your average. I can't wait to challenge you. I have my picks coming tomorrow, everyone. I'm recording it today. It will be released tomorrow. I only have 6 for the year, so it's a little bit less, but it's a higher conviction, higher allocation per pick, and I can't wait to share it with you. Also, as you know, a few companies got hammered in 2023, and maybe there is a recovery narrative for some of them. So Higgo will be releasing a video soon discussing those picks. Maybe we do see some recovery narratives, and you can make some real money. You have to be careful because you can burn your fingers, but there is some real potential in the market for that. And Higgo will share that with you within the coming weeks. Higgo, any last words for the community?
Yeah, so just a note of gratitude. As a startup in South Africa, you really need to adapt on a frequent basis. It's not easy, and this FinMeUp journey has now been close to 5 years. And after various iterations and various successes and failures, we've narrowed down our core focus and really what we want to be known as, and that is your financial companion. And what that means in our words is a financial companion is a financial mentor and partner that is invested in your success. So not just advisors or anything like that. We have skin in the game with you, ensuring your financial growth is our victory too. So, Paul is one of the financial companions, the Wealth Wingman. You can book a call with him. He is a financial companion to many of you already. So book a call with him, have a chat to him, continue joining this journey with us. It's really incredible, and we've got a lot of exciting things planned for you this year. So really excited and really thankful. We just appreciate all of you. And remember, as a final fun piece for today, also let us know in the comments what your picks are for 2024. It's always fun to see how we perform. Thanks for being with us.